On this week's dose, we welcome on Ben Topor, founder and managing partner of Titan Capital Partners, an Israeli firm that invests in world-class growth stage tech companies.
Yeah, Ben spent an early part of his adulthood serving in the Israeli intelligence directorate and later worked his way up in investment banking.
Right, and then fast forward to 2021, and Ben founded Titan Capital Partners. And in this interview, you'll hear about how his experience has enabled him to find and invest in unique market opportunities in these first couple of years since launching the fund.
Stick with us to hear him break down the Israeli startup ecosystem, as well as what differentiates Israeli founders in his mind. Really interesting input there, and some of the challenges facing Israeli founders today.
Right, truly loved hearing his unique perspective, being that he comes from an Israel-based investment firm at Titan. And lastly, we'll wrap up the conversation with a discussion on his philosophy on what makes a good investment opportunity and his unique advice to the pilgrims looking to get into venture.
Yeah, it was amazing to connect with such an awesome guest from across the world. Just one of the many joys of starting this podcast.
Exactly.
And it was a pleasure to have Ben on. We're excited as ever to share this dose with you all. And with that, here it is.
The views, statements, and opinions expressed herein by the hosts and their guests are their own, and their appearance on the podcast should not be construed as reflecting the views or implied endorsement of Independent Brokerage Solutions, LLC, or any of its officers, employees, or agents. The statements made herein should not be considered an investment opinion, advice, or recommendation regarding securities of any company. This podcast is produced solely for informational purposes and is not to be construed as an offer to sell or the solicitation of an offer to buy a security.
You see here, kid? You gotta just go for it. Don't think about what comes after or what came before. You just gotta bend your knees, take a deep breath, and jump.
This is Venture Pill, your weekly dose of startups and venture capital. We break down recent startups in the news and interview founders and investors to help you stay informed in the evolving world of venture. All right, on this week's dose, we are honored to welcome Ben Topor, founder and managing partner of Titan Capital Partners. Ben, how's it going?
I'm all well. Thank you for having me in the podcast. It's a pleasure.
Oh, of course, and it's a pleasure to have you here. To get things going here, we'd love to hear just a little bit more about yourself. Tell our listeners where you're from and what the journey was like from your role in the military all the way to founding and being a managing partner at Titan Capital Partners.
Well, Brendan, thank you for the question. I think I've started my career like my peers in Israel. We have to go for military service. In my case, I was an officer in the intelligence directorate in the army. So I did it for 5 years. I actually later on was recruited for the Department of Defense. So I've continued for a good 7 years in my life. Were devoted to intelligence analysis. And when I finished my duties, I actually founded a nonprofit in Israel, which is doing affordable housing. There's actually a funny anecdote that there's an existing city in Israel, in the south of Israel, called Ofakim, and there's a neighborhood there called the Noach neighborhood, the Noach Forest neighborhood. And it's called actually after the nonprofit I founded, which is called the Noach Initiative. So sometimes when I go there, everybody knows me, and I feel like a micro celebrity in town. Back then my intention was to initiate a social program for the benefit of young adults in Israel to achieve housing in a cost-efficient manner, and at the same time to help peripheral areas. When I finished the university, I studied in Tel Aviv University, economics and East Asia studies. After graduation, I've started to work in investment banking, in one of Israel's largest investment banking firms. And I climbed the corporate ladder, if you will, from being a junior analyst onto leading the technology, media, and telecom team, where I think I I learned a lot, and where I gained a lot of skill set in terms of fundraising and M&A in software and internet companies in Israel. And this is also after a few years doing that, I've begun investing, obviously my own money, and through other structures, and I also later on joined one of Israel's long-standing growth equity firms. I was there a managing partner, and in the beginning of 2021, I've left, and in the end of 2021, I founded Titan, which is a growth equity firm, which is based on the experience of the strategy and the tactics I developed throughout the years. Our main strategy is growth equity, but we have special expertise in secondary investing, and I'm happy to tell a bit about that. But maybe I will just share in terms of, where do you gain for growth equity and secondary investing a lot of experiences where you, I would say as an advisor throughout the years, developed a lot of relationships, not only with the founders, but also with shareholder bases. So I represented them and I led them throughout, guiding them through transactions. So I think this is, in essence, that's a big contributor to my abilities that I've developed throughout the years.
Yeah. So for our listeners, we call them the pilgrims. For the pilgrims out there, just clarify a little bit more what Titan Capital Partners focuses on, specifically when you say growth stage and secondary markets. What do you mean by that? And tell us a little bit more about the specifics there.
Well, we're investing in companies which are from early growth stage onto late stage, primarily in software and internet. I think the roots of this focus is really derived from the type of talent you find in the Israeli ecosystem. Israeli high-tech industry is quite unique in interesting characteristics. But generally speaking, I think in Israel we had like three waves. In the 90s, most of the ecosystem was focusing on telecommunications, and we had several very big companies going in that and leading the world stage in telecommunications. And in the 2000s, the Israeli industry was developed a lot of world leading companies in semiconductors. If it's companies that later on, one of the most known is obviously Mobileye, that was sold for $15 billion to Intel. And I think now we're in the third wave of 2010s onwards, that the Israeli high-tech industry is, and the talent pool is focused mainly on cloud and infrastructure level software. I think a lot of the engineers coming from the army to their life as civilians, they actually take a lot of the capabilities the army taught them. And specifically in Israel, the intelligence division in the army is one of the largest corps of the army. So you have a lot of people coming into civilian life trained in software and coding and telecommunications. And this is the type of companies you see later on being formed. So in that context, we invest in companies that tend to cross $10 million of sales. And through the secondary space, we obviously, we do full spectrum of secondary transactions, including buying from angels, fund managers, employees, founders' shares. We also buy limited partner stakes in other VC funds. So we have a flexibility of a secondary fund, but in the end of the day, we have a growth mindset. So we're not building a portfolio of 100 companies. We have a risk as a growth investor. However, I think we have an advantage in terms of our entry structure, so we can optimize it if we need to.
Yeah, that's really interesting. I don't think we don't hear much about different VC firms investing in secondary markets. That's kind of an interesting approach to a nice differentiator. Um, Definitely, I'm curious to hear more about the Israeli venture capital scene. But before we get there, let's stick on Titan for just a second longer here. Would love to hear about some of the more noteworthy or compelling portfolio companies, if you don't mind sharing.
Sure. Well, we made our first of all, we started the fund not long ago, and we've actually entered to the market um, at the height of the market in 2021. And
Yeah.
so, with intention, we actually didn't deploy much into the market because the pricing was very, very high,
Mm-hmm.
especially in cybersecurity in Israel, which became the bubble territory.
Yeah.
Yeah.
Um, the investments we made so far, maybe I'll mention one of them. We bought shares, we invested, and also bought shares in a company called Verbit, Verbit AI. They are the world leaders in providing AI services to the transcription market. They have the largest market share in the US media and entertainment market. The company is crossed $100 million of ARR.
Wow.
Um, they, they developed a very advanced algorithms that can obviously recognize human voice and translate it into text. However, the challenge is that for many use cases, including court reportings, for example, or education purposes, when you need to have the lecture 100% transcribed, and to reach 100%, it's really is really possible only with a human in the loop to go over the AI. So Verbit has built a marketplace with 25,000 transcribers
Oh, wow.
that can fill in the gaps where needed for the AI. And this is how they can provide transcription services with 100% recognition in a scale that has never been seen before. And obviously, the market for transcription is mainly today, the services are being provided by very small firms. We call it mom and pop shops.
Yeah.
So big organizations, they that have transcription needs, they need to use 5 or 6 different vendors sometimes. So it's the first time a company like Verbit can serve the entire need of big organizations.
Wow.
Yeah, so that's where our first investment. We were very excited about their technology, about their growth momentum. They reached $100 million of revenues in less than 5 years.
Wow.
And we were excited about the market opportunity and how they can very smartly acquire parts of the market, traditional businesses, and migrate them to their AI platform.
Yeah. That's incredible. And you said this is an Israeli company with largely a customer base in the US?
Yes, generally speaking, almost 100% of the Israeli high-tech industry is addressing the U.S. market.
Yeah.
So there's no. This is. I think the entire world is addressing the U.S. market in the end of the day. But I think I think that generally speaking, if the US is the largest target market. It's the easiest for Israelis to penetrate because of English, right? In Europe, you have many different languages, and also the buyers of software. Who are the buyers of software in the world, right? Those are financial institutions and technology companies. Those are the main buyers of software products. So there is an element where a company has generated already $2 or $3 million of revenues. Many of those Israeli tech firms actually migrate. The founders migrate, and they move their HQ to New York or Silicon Valley. So you have hundreds of Israeli entrepreneurs with companies in the US. We regard them as Israeli related. Overall, I'm happy. Maybe I think I would say a few words about the industry. The Israeli high-tech industry is very large. There are, maybe the numbers need to be amended with all the different volatility in the public markets. But according to our analysis, there are 94 unicorns in Israel.
Wow.
So just to give you the sheer scale, it's more than entire Europe combined. So
let's go.
It's a very big industry, and you have hundreds of companies with significant market positions in all the different categories of software and internet. The amount that has been deployed into venture capital in the last year was a bit shy than $16 billion, which is larger than many other hubs. So it's one of the largest hubs in the world. Obviously, Silicon Valley is much bigger, but the unique characteristics are the fact that unlike many other markets, I think Israelis, and that's another discussion one can have. Why is that? But Israeli companies tend to be more efficient than other companies. We don't spend. If you look statistically, if you compare what is the exit amount and how much the companies has raised, so you see that the multiple. This is very basic multiple to do, but the multiple in Israel is much higher than anywhere in the world. There is a case, and I think Israelis tend to be go-getters, straight shooters. The Hebrew language is very condensed. Like if you translate something from Hebrew to English, so the English translation will be 150% more words. So the whole mentality is very direct, and also I think that's the reason that a lot of those tech companies tend to focus on serving B2B clients, because in the end of the day, if you're far away from the US, it's hard to sell to big markets like consumer markets. We're not experts in marketing. So it's easier for Israeli tech firms to sell to B2B because you have a tangible list. This is the list of customers. You need to sell to them. So it's just, this is how I think the high-tech industry evolved. And obviously, just to mention a few, very notable companies like cybersecurity is obviously a very strong field in Israel. You have Checkpoint Software, one of the largest firms in the world. You have Palo Alto Networks, which is it's not an Israeli company, but the founder is Israeli. Okay, it was an employee in Checkpoint that left, started a rival firm. You have Sentinel One. You have Cyber Reason. So all of those companies are cyber firms, and this is just a few. There are hundreds of very sizable cybersecurity companies. Monday.com is very notable. Waze, which was sold to Google, people know them. I mentioned Mobileye, which is integrated to autonomous driving vehicles everywhere in the world. And many just boring infrastructure and cloud technology companies. You have JFrog. You have Fiverr, which is actually in the consumer side marketplace.
Yeah.
So just I'm naming a few that are publicly traded.
Yeah. So many success stories coming out of Israel. And it's great to hear kind of your perspective there, explaining why you think they've been successful. What do you think are some of the biggest challenges? You mentioned, a little bit about how it's hard to sell to the consumer market. What are some other challenges that Israeli startups are facing today?
Generally speaking, I think the state of affairs is very good. Obviously, considering everything and the market has changed, um, I don't think I don't think there's specific challenges that Israeli founders are being confronted. I think maybe one of the challenges is derived from a good thing. As I mentioned, there are so many unicorns, but the market
Mm-hmm.
has changed, and their valuation should, theoretically drop. So how
Mm-hmm.
do they do those down rounds? So the good thing turned to be a complexity, right?
Yeah.
So I think there are a lot of very strong Israeli companies that are now trying to grow into their valuation, um, which is not easy, right? Because at the same time you need to grow into your valuation, you need to reduce costs.
Yeah.
So sales and marketing. Um, yeah, but again, like I think the overall trend of migration to the cloud, or the overall trend of the need for cybersecurity and privacy, the trend of the rise of the developers, the developer tools. Um, those are very strong trends. Obviously, AI.
Mm-hmm.
That eventually the fundamentals of the market are very strong. You have a very experienced talent pool. So founders in Israel, you see many of them are like third-time founders.
Mm-hmm.
You have a very strong VC ecosystem. You have more than 200 VCs only in Tel Aviv. One told me that the most condensed area on Earth in number of VCs in a square kilometer. But and you have another 200 which are foreign investors. Most of the investments are not from Israeli funds. So it's a. I would argue that Tel Aviv is probably one of the easiest places to raise capital.
Interesting. So venture capital in the global economy is in a pretty interesting spot right now, right? As you've already mentioned, there's companies that have to kind of strive to meet their valuations, feel like some of the bubbles have popped. You already touched up on, your opinion on how the state of the matter right now, but we're curious to hear where you think things are going within the next 3 to 5 years or so.
Yes. Well, maybe I will just say, generally how I look at the venture capital, or the venture capital cycle in particular. Obviously, there's periods of peak and trough, and periods of contraction and expansion. Um, it's all the cycle in venture capital. I think is not as pronounced as the public markets. Okay, public markets are moving very quickly, and the cycle in venture capital is mainly driven by the amount of LPs commitments to VCs. that's the driver.
Yeah.
Yeah, now we're in a period that interest rates are there's inflation, and the Fed increased the interest rates, and so all the other central bankers in the world. So many of the investors prefer to shy away from VC and invest in asset classes that provide more, less risk, more liquid strategies that can provide 5%. And, there's many of those
Right.
right now. Um, and, when is the things will change? When will LPs start to invest again in VCs? Generally, it will be when VCs are doing well, are having a recent good track record,
Mm-hmm.
and that will happen after all the noise will exit the market. So the bad companies will go bankrupt. The entrepreneurs will build more quality companies, and it will take a few years. And those VCs that invest right now will have a positive track record, and this is where I think new LP money will start to invest back in VCs, and the entire cycle will come back. Obviously, it's all need to be correlated with the public markets, but I think the public markets will move first. Okay, the market will come back, but still, it will take time for VC to catch up. So yes, I think now there's it's a very healthy calibration. I think there's more time for venture capital to make due diligence. Frankly, there was no time in 2021. The competition was so fierce, and many investors have been compromised with making decisions without proper knowledge. So I think it's very healthy now that the investors have more time, and also the founders are much more careful to keep their burn. Yeah, that's the overall. So I'm optimistic, specifically about Israel. I think there's strong fundamentals. So I think things will come back. It might take a few years, but we're investing for a long term.
Right.
So I think overall the state of affairs will be good.
Yeah. Well, you guys are early in the life of your fund, and you're talking a lot about what VCs look for in founders and how there's actually being diligence is being done now. Speaking of that, what do you look for in founders when you're doing the diligence in those companies?
Well, first of all, one needs to remember that we invest in early growth and late stage. So I think as opposed to a seed round, which is or pre-seed or earlier stage, there's a very big emphasis about the founder and the founder's experience and his track record, and that he's a person that says we as opposed to I. Um, so I think this is very important for seed investors because, frankly, there's no other thing. Like even the target market or the product can change very quickly. So the founder's quality, and you can separate it from his experience to his psychological capabilities, how he handles stress. And so I think reference checks are very important in that stage. In the stage we're in, it's easy to vet the company based on fundamental financial results. So we can actually see, how much it costs the company to attract a client and how much a client is worth. So it's very easy to say, okay, the engine works. The client is returning 3 times the cost. So the company is ready for expansion capital. So I would, what we look for in companies is, first of all, the unit economics, as I mentioned, to see that the engine is works well. We look at the technology because in the end of the day, the winners in software and internet, it's a guerrilla game. Okay, you need to be the gorilla. You need to penetrate a market which is not too competitive, or a market you can potentially lead. So it can't be a market which is too big. It's only small for you to lead, but big that you can grow at least 20 times. So I think the competitive landscape is also very, very important in our stage. And also the profitability potential. So you can see clearly that there's the gross margins and the ability for the company to to leverage their assets into profitability.
Yeah.
Yeah, makes sense. Definitely some key factors there. Appreciate you sharing. As we start to transition towards the end of our interview here, we'd love to give the listeners an opportunity to learn a little bit more about you. Aside from managing partner at Titan Capital. So with that said, is there any, or what's the best advice that you would like to give to our listeners who may be looking to get into the world of startups, venture capital, entrepreneurship, either as founders or just investors or any way in the space, really?
Yes, well, I'll tell you what I found to be the secret sauce. The secret
Okay.
sauce is to understand and to have innovative or no, I think innovative insight on the market. This is the whole thing. You need to know something better than the rest of the crowd.
Mm-hmm.
And how do you get to, once you know something better than the rest, you either start a company or you have a thesis that you can invest in. But in the end of the day is knowing something better. How do you know something better? It's either that you are more cognizant to fundamental shifts that people are overlooking. It's either you have an understanding of reality which is different from what is the reality is different from what is perceived by the rest of the market. It could be that you have an insight about a technology momentum or a trend. You need to one needs to find an insight, and this is how if you translate to practical steps. If you have an insight, it will be very easy for you to convince people in technology that they need to hire you, or you should join the company, or should join the fund. So that's my advice, to really understand and to find something that the others don't.
Yeah, I love that. That's unique advice, and we ask this to most founders and investors, and I would say that's definitely a great answer. I wanted to call out something quickly. I loved the way you described earlier the customer acquisition cost and lifetime value as an engine. I thought that was just a great way to think about it, as an engine that's ready to rev up. So I think we'll be using that in the future. We love talking about metrics, and we always reference David Sachs from Craft Ventures and his emphasis on the metrics, especially when it comes to SaaS companies. So I think that goes hand in hand nicely. He's on a podcast we like. You clearly are a fan of Venture Pill. Do you have any other podcasts that you like as a resource for our listeners, or any books that you may recommend when it comes to startups?
Well, I have two maybe recommendations. One is there's the Acquired podcast. I think it's very resourceful. It goes really in depth into companies, and the episodes are sometimes 2 or 3 hours. Actually, my first recommendation, and then it's a book which I really think is the most advanced book ever written about how technology markets behave. It's a book called The Guerrilla Game. It's a book published in 1999 by Jeffrey Moore. Jeffrey Moore is a strategist. He's the one who wrote Crossing the Chasm, which became a bestseller. And I think his book in 1999, because it was just before the crash, is a bit overlooked. But this is the first book that explain how come there's 5 competitors in a certain segment, and one of the companies is just valued 10 times more than others. Why markets behave like that? Why segments are being valued more than other segments? So this is the book that goes in length into explaining the dynamic. Why are tech companies are valued by revenue multiples rather than EBITDA? There's a reason for that, and this is one of the books that explains all of those issues.
That's awesome. Yeah, definitely to be added to our list. Got to check that out.
Yeah, we'll link that in the show notes as well as Acquired. That's a great one. So thanks. Great suggestions.
One more question for you before we let you go. We've already highlighted so many Israeli startups, successful ones. Are there any lesser known, lower key startups maybe that are a little under the radar that we or our listeners may not know about, but you think that we should?
I think one of early stage tech startups we were very impressed is a company called Statement.io. For example, it's an Israeli company. They are addressing a market opportunity in finance operations. So one of the biggest challenges, there's many, fintech, there are so many different elements. One of the elements that are at stake, even today in the fund, you wire money, but you don't really know who wired you the money. Like it's not as digital as one would expect. And there are, you can imagine there are companies that the entire day are doing hundreds and thousands of micro transactions.
Right.
And sometimes those transactions don't work. You wire and it's bouncing. What happened? How do you do that? So they are tackling this issue of payments and finance operations, which I think is a very smart and a very big problem set. And I forecast that the company will be very successful.
Yeah, I love that. That's, I didn't even think about that, but that's certainly, a little area that could certainly use some more transparency, especially given how frequent wire transfers are conducted, right?
Yeah.
It's interesting.
Yeah. Well, Ben, we always want to make sure our listeners know how to follow you and get in touch with you. If they have any companies you should check out or they're just looking to connect, what's the best way?
So first of all, my email is at the website of Titan. Everyone can send an email. I have a blog. Everyone is welcome to subscribe in Medium. Yes, we are very approachable. We are based in Tel Aviv, and everyone is welcome to come by.
Yeah. Next time Brandon and I are in Tel Aviv, we'll have to come by and say hello. So we look forward to that, and we'll certainly link Titan's website in our show notes so they can check it out.
Sounds good.
Great.
Yeah. Thank you so much, Ben, for taking the time. It's been an honor. Hopefully we boost our listenership in Israel a little bit after this episode. But no, nonetheless, really appreciate you taking the time, talking about what you're working on, telling us a little bit more about yourself, and hope you have a great rest of your night.
Thank you. Thank you, Brandon. It was a pleasure.
Thanks for listening. Join us next week for another dose of startups and venture capital. And as always, we appreciate our pilgrims spreading the word about the show. Share with your friends and help someone else make the pilgrimage. See you next time.
She told me that she only bumps my music when she's lonely. Thinks my vibe's a little low-key, okie dokie, that's alright, but wait, I don't know how to do